The bond market has been making headlines all week. People are very worried about the bond market. And the ironic thing is, the bond market's doing exactly what everybody hoped it would do 6 weeks ago. But it's the reason it's doing it that's got everybody worried. So I'm talking specifically here about US Treasury bonds. This is one of the biggest financial markets in the entire world. And these bonds are essentially a little loan you give the government. And they're for different periods of time. There are 4 week bonds and 2 year bonds and 10-year bonds. And at the end of that time, the government pays you back plus a little bit of interest. That interest is called the yield. And it's not usually a ton of money. You're not going to get rich buying these kinds of bonds. But the reason people put money here is because they are seen as so safe. They're actually called the riskless asset. You know you will get your money back. And that safety is exactly why investors and countries all over the world buy up billions of dollars worth of US Treasury bonds every single week. And the US counts on that money. That money keeps the lights on in the US. It goes to national security and roads and everything else. So the government really needs this money. It counts on it. Now, in the last few years, the interest the government has been having to pay, the yield to investors, has gotten pretty high. And the reason isn't so much that people are worried the US won't pay it back. The reason is inflation. So let's say I buy a 2 year bond for $100. And at the end of that 2 years, I will get my $100 back plus a little interest, let's say $5. But let's say during those 2 years, inflation has really taken hold. By the time I get my $105 back, it doesn't buy very much. It might even buy less than the $100 would have bought 2 years ago. And now I have lost money on my investment. Inflation is the Achilles heel of bonds. And people were so worried about inflation, they were backing off buying bonds. They were worried. And so, in order to get people to buy bonds, the government was having to offer higher and higher interest rates or yields to sort of entice investors back in. And that was seen as a bad sign for the US economy because A, it was a signal that investors all over the world thought inflation was going to keep going. And B, this gets really expensive for the government because the government's having to pay higher and higher interest rates. We already have a $35 trillion debt, and the amount of money we spend just servicing that debt is equivalent to our defense budget every year. So the fact the government's having to pay higher and higher yields on these bonds is a very big deal. Well, in the last few weeks, bonds have come down a lot. So you think everyone will be happy, right? No, it's got everybody really worried. And here is why. So, the reason that bond yields have come down is not so much that people are no longer worried about inflation. It's that people are more worried about the US economy slowing down. Investors all over the world are looking at the US economy and they're worried. They're looking at the job market, they're looking at the prospect of tariffs, they're looking at the stock market possibly being overvalued, and they want to put their money somewhere safe. And they are more worried about that right now than they are about inflation. And if things go south in the economy, you want to own bonds because if you own stock or you own crypto, your investment can lose a lot of its value overnight. If you have bonds, that's not going to happen. The worst that can happen is by the time you get your money back, it's not worth quite as much as it was when you invested it. And right now, investors all over the world are piling into US government bonds. And because of all that demand, the government is not having to offer the high interest rates or yields it was having to offer a few months ago because demand is so high. And so that has actually brought treasury yields down, which is what everybody was hoping to see. But the reason is not that people are no longer worried about inflation. It's that people are more worried about the direction the US economy is headed in right now. And so that is why people are buying bonds. And that is why everybody's worried that bond yields are dropping. This is a story I just did for Marketplace about the bond market. And for the story, I went to a very unique ice cream shop here in New York. Check it out.